All right, we're here. We're here. See, when did we go? Were we on last week, Eric? I can't remember. I slept,
No.
and I've been all over the country, and I'm trying to remember where. I keep saying I'm in Dallas and I'm in Austin now, and I was just in LA and Phoenix and everywhere else. But all good, man. Good to see everybody. Get a good turnout coming in. People are getting added all the time, so make sure you guys mute yourself when you come in, and then if you have questions, just raise your hand, and then we'll unmute you and call you. We
And
have
then also throw it in the chat, because what we always do, we
yeah,
like to go back into the chat and answer some of the questions. So
absolutely do that.
Kevin's
So,
nervous because we typically get 40,000 people on this call. So no pressure.
no, 30 to 35,000. 40 is an exaggeration, Eric.
All right.
Jeez. Anyway, dude, I am excited to have Kevin on the call today. Kevin, I know we had talked, oh man, maybe 6 months ago, and we were talking about this and how we can really add value to our group and really look at it from a different set of lenses. Because here's the deal: most lenders, I'll be quite honest with you, a lot of the lenders, I like hard money lenders more than I do private lenders. And I'll let you introduce yourself in a second, because they're more educated from the standpoint of understanding the right way to structure deals, right? And what I mean by that, a lot of people think they can go out and get cheaper capital because it's private, because they can get it from whoever. But here's my biggest challenge that I've learned over doing 1,000, almost 1,200 transactions, is that hard money lenders are a great filter on whether the deal is a deal or not, right? We talk about deal or no deal all the time in our group. And for me, I like, even though hard money lenders are more expensive, but in the grand scheme of things, when we're only in these deals for a shorter period of time, they act as another filter to make sure the deal works or not. And I think that's extremely important. So anyway, tell us a little bit about yourself and why you're here. There's Dave. I'm going to let him in real quick because he'll want to chime in as well. And I'll introduce you first, and then we'll jump over to Dave.
Okay, yeah. So real quick, 10,000 foot view of me. I started real estate when I was 17. I just turned 51, so I've been doing it for a while. I'm the guy with the gray hair now. I've done 4,500 deals. We had 973 rentals between Houston and Orlando. My forte is finding deals. We got real good at it. We created a lot of different niches around the country. When the REOs dried up, we pivoted into non-performing notes. Most recently, I just raised $50 million for a reverse mortgage tape. The guy I raised that money from sits on the board of OfferPad, which is a partner of ours with Open Door and a lot of the other guys. But I pivoted into the hard money space when my partner pivoted into notes. His whole job was to get notes to foreclose on to get me assets so that I could loan on them. We did all this through a company called Anders Capital Group, still alive and kicking and cranking. I started developing a program for brokers because all the REO brokers out there were starving. We have a network of 180,000 REO brokers who were used to being the contacts in their local communities, right? So they were the guys like every investor knew. You knew who the REO brokers were because they had 100 listings. And if you didn't kiss their butt, you weren't getting a deal, right? I got some guys here in Orlando that I got video testimonials I was seeing where they've done, I didn't know I did that many, but I did up to 300 deals with one company here.
Is that right?
Yeah, over the years, it just was, and all I did was let him have the commission. That was the big trick. Just, all right, put my investor hat on, take my real estate broker hat off. And some of these guys, they'd ask for the listing at the end. Some of them didn't care. But bottom line was that got, the REO world got harder and harder. So we became the bank. We went out, started raising capital. We raised $500 million a few times now. We've raised RW Baird. We had a statutory trust set up with them. I mean, just the trust cost us a couple $100,000 to set up. We've raised money with a company called Salutagrade. Most recently, LL Funds, who is a board member of OfferPad. A real creative guy, the head of that company. They're a multi-billion-dollar company, and he keeps coming across me on different deals he's on. And he's like, Kevin, are you on the call? And he's like, yeah. I'm like, he goes, dude, you're everywhere. And I was on some manufactured home modular prefab thing the other day, and he goes, "Is that Kevin?" I was like, "Yeah." So we just closed another 15 million with him. But what we do, we get them for the purpose of getting the asset, which most note traders actually go into it to reperform the note. Then they want to sell the note. We always wanted to get them in the hands of investors. And when I got approached at an IMN conference, which I'll be in Nashville starting tomorrow, but down in Miami, I was down there, and this guy who sold me my GMAC franchise years ago said, "What are you doing about this iBuyer thing?" And I go, "Don't know about it, don't care about it," you know. And but I actually did. We had some former partners that are actually piloting it with OfferPad and Zillow at the time out in Phoenix, and which later became IREP, by the way, which brings us deals every day as well. And what it was like, what are realtors going to do with Open Door, OfferPad, Zillow, and every other iBuyer like we created? And the answer was, we'll give you the technology for free. We've raised $500 million. Go make offers. And the realtors were like, "Oh, I don't have to have Open Door, OfferPad, Zillow. No, you can be a Remax, you could be a Keller Williams. I don't care who you are." So we wrote that software. I piloted it with 600 agents up in Knoxville. We bought 3 or 4 houses that month. I kept one for myself, which I'll be going up to Airbnb it. But what we're doing is, I went to Ross. I said, "Hey, I'm getting too many properties. I can't scale the contractors. I need local investors that have their own contractors." And Ross says, "Well, we don't have that. Why don't you come build it with us?" And I said, "No, I wasn't looking for a job." But he convinced me. And the number 2 guy there, Marty Cohen, said, "Hey, man, we got 50 employees. I had like 7 at the time." He says, "We could really ramp this up." So after 3 or 4 months, he talked me into it. I came over, we started building what we call the Connected Investors Exchange. They also had me running senior vice president of business development for anything lender related. So to tie it back into this call, I'm kind of the old guy, knows a lot of the stuff about, you know, the private lending side, different joint venture structures. I met Nick out in, of course, hard money, but I met Nick out at Family Reunion, and I started hearing about his model, and I really liked it. I was like, you know, that's going to be huge as interest rates start to go up. So we're wanting to get involved with you guys. And Dave Maurer, my colleague over there, he's our chief networking officer, I call him. He's out meeting everybody, and he introduced me to Nick over at Family Reunion, and we kind of hit it off and said, well, what can we do to help his network? And so I'm tied into pretty much every hard money lending company out there, one fashion or another. We run privatelenders.com. We do joint ventures. We have an angel program that I rolled out at Success Cap. We're doing 10 houses in Knoxville right now, where a guy bought basically a small mountain. He built one house, and then he got in trouble. He ran out of money. He's like, I need a partner. But his credit was a little bit like 600, 590, and he kind of ran out of capital. You know, hard money lenders, they want to see your credit a little higher, and they also want to see that you got some reserves. So we're doing a joint venture. And what I'm going to do is go up to, I'm doing this Nashville show. So I do my job for Connected for a few days, and I'm going to drive over to Knoxville and work on this on my own house. But then I'm going to this mountain, which is where we're at is like, you're not downtown Knoxville, but you're not in the Smokies. You're kind of in between there.
Right.
So it's kind of a nice little area. And so basically we're going to take and develop the rest of that mountain. It's beautiful too, by the way. They did a FaceTime with me. It's all mountain views. And then there's a big lake at the bottom, which the lakes there are massive because they flood the areas. So I just look at certain areas. I like the Southeast in general. We've done a lot up in Pennsylvania, New Jersey. We did 258 houses in Chicago last year. So kind of all over the place, but everything has to do with funding for me. Everything that I do is all about raising money, funding. I like Nick's model. I think that's going to be a really good thing going forward. You know, I think interest rates as they go up, these wraps, I think are very, very creative. But anyway, that's kind of my intro. A little long-winded. That's okay. I never said I'm not long-winded.
I think what's important for most people to understand, and this is where these guys there's a shit ton of hard money lenders out there, man. And believe me, I've gone through the majority of them, and they don't get what we do a lot of the times. And I don't really have the bandwidth to go explain what we do. Okay. This is not some speculative model that we're thinking is going to work, right? We've literally done this thousands of times, and now it's just finding the right partners to implement on, the work with. And what I like about what we've done here, and what you guys got to understand, is that what we've set up with Success Cap is, I would call it more of it's more of a concierge level kind of a product versus going to the masses, right? So we have like sort of a little back door that allows, when they go through the link, to get them sort of like the VIP lounge access that most people don't even know exists. And that's, and I want to thank both you and Dave for allowing and trusting in us to be able to put good quality people through the program and have them sort of pre-vetted. Because I already know this. I talk to lenders all the time, and they go, man, I ask them what kind of, the first question I ask them, or one of the questions I ask them is, well, what's your conversion rate? If 100 people come knocking on your door to submit a loan, how many people will get approved? And they go, and it's all over the map. The biggest reason why the conversion rate or the application rate is low is because the people that are submitting the deals are submitting either crap deals or don't know how to submit it correctly. So that drives it way down. Hopefully what we're going to be able to do through the education and everything that we provide is that when they go knocking on the door to submit the application, that they've already know what needs to be in place so they can get in and get out. And then if it doesn't get approved, it's not because they didn't submit the deal correctly. It's because through the eyes of the lender, it's just not a deal, right?
Yeah.
And I think that's the one thing that we always try to speak to and go, look, not all deals are deals. Just because you think it's a deal as an investor doesn't mean a lender is going to think of it, because it's all based on risk and value and everything else that goes along with it. So we need to make sure that they do it. And I'm okay with the lender saying no to a submission, because that's the protection that's afforded, because nobody wants to go belly up on a rehab, on a fix and flip, even if it's just paint and carpet or whatever it might be. So we'll work through that, and we'll make sure that we give them the right tools that they need to submit correctly and do this. So I see Dave's there. So Dave, let's get Dave on here. Tell us a little bit about maybe the submission process, maybe what you guys do and don't do, or what some of the challenges are you're seeing right now, sort of the time frame. Because at the end of the day, you guys are really what I like about you guys more than traditional hard money lenders, that even though you guys lend your own money as well, but you also act sort of like as a fintech lender, right? Or you probably are. And let's talk about what that means, because to me, that's extremely important, because here's how I look at what you guys do. I look at it, instead of going to the Ford dealership to go buy a Ford, and then going to the Dodge dealership to buy a Dodge, and then going to Chevy or BMW or wherever, I'm going to go to CarMax. I'm going to look at all the cars in one location, because I just need to buy the car, right? Yeah. And you guys that's what sort of fintech lending does. It takes all the criteria that you put into the loan application, the type of property, the loan amount, the credit of the borrower, all that stuff, and then you match, right? So if I understand it correctly, and so Dave, why don't you talk a little bit about that and how that works in the grand scheme of things?
Yeah. So basically what we're trying to do is really have a concierge white glove service. And, big density would be great, but big density is trouble. What we want to do is find someone like Nick, say, Nick, here are our resources. This is everything that we have. So kind of the CarMax, except we're giving you the Tata Motors treatment. Tata Motors owns Jaguar, Land Rover, things like that. So we run it like a boutique. We run it as a custom design based upon your experience. That's going to be one of the first questions that we ask is, hey, what kind of experience do you have? Where are you looking? We want to know a little bit about the area, what's going on, looking at trends to see, how it's viewed as, is this a safe place to put money? So it's some of the run-of-the-mill standard questions, but it helps us elevate the way we handle you on the backside with other processes, with other team members that we have working the program as well. So I always say, Nick, that I kind of feel like I'm a pharmacist. I've got a shitload of medicine behind me, but I don't know really what to prescribe you until you tell me all your pains. And then the minute you tell me and we qualify and we look at your projects and we look at your experience, and Kevin and I put our heads together with Daniel and the other team members, and we come up with the best prescription for you. And then we try to 1X that, 2X that, 3X that.
Are there any types of loans that you guys are either transitioning away from or just not, not interested in for whatever reasons, or are there any markets that
I'll tell you what
talk
the
about the
trends are.
exclusions, because we know that you do a lot already. I'd rather just talk about the stuff, because then everything else will fall in.
The biggest thing that I'd say, there's two exclusions. One is a newbie that wants to do $1 million new construction project. That's not going to fly.
I would tell them no to that also.
Yeah.
Those are partnership. Find somebody. Look, we have this come up quite a bit. And the answer to that question is go find somebody that has the experience,
right,
and the track record, and just partner with them until you get that, because you can still utilize that experience as being a JV partner. Would you count that deal? If I do 5 partners, 5 deal, I'm a newbie, right? And I do 5 deals with Dave. Okay. And we do them all successfully. I'll eventually be able to still take that as my credit when I come back to you. Correct? We actually
encourage putting that into a joint venture.
That's right.
Where we could use one person's credit, one person's experience, and maybe a third person's capital. They're all going to be on the same LLC. You just build a purpose. You do an LLC just for that one project, and you can gather your experience there. So if you did one JV with one guy, another JV over here, they're going to want to see you on the LLC, just so you guys know. We do a thing called a development agreement. I've done probably 1,000 now, where we have a 3-party development agreement. I personally think that would count to show me a development agreement where it's basically a joint venture. The LLC holds it, but then these other 2 LLCs have duties and roles or whatever. We've done quite a bit of that. I've gotten financing for hundreds of properties in like Atlanta, Georgia and stuff doing that. One kind of thing to think about, I want to make 2 points though. I built this little analogy of a bar stool. Like I'm 250 pound, 260 pound guy, depending on what week it is, right? I like to sit on a bar stool that has 4 legs on it, right? So you got to think about a lender's thinking about you the same way, all right? He needs to sit on you, basically. He needs to understand he's secure in his investment. So what I did was I came up with this analogy of your credit is one thing. That just shows your track record of how you pay people. Your experience is another one, right? Your liquidity is another one. And then lastly, the 4th leg is the deal itself. So you'll see a lot of these coaching programs. Hey, you don't need money, you don't need experience, you don't need credit, you don't need anything. Well, you need something. Think of a baseball analogy. You only have so many strikes and you're out. But the bar stool analogy I like, because you can sit on a 3-legged bar stool pretty comfortably, but 4 or 5 legs makes you feel even better. So we kind of we're the advocate of the borrower investor to help build those legs. And one program we have is an angel program where you get a guy that has a little money with decent credit and he's got a good deal, but he has no lender that will handle him. That's what we're doing in Knoxville right now. And we've done it all over the country, is we go in and help him get his 3 deals. The way you got to think about hard money / private money. Obviously private money, everyone has a definition problem here. I wrote an article in Private Lender Magazine last year, and I said, hey, let's get to one way of explaining what a private lender is versus a hard money lender. And I said, let's just call it a non-banking, because it's private money. And organized private money is basically hard money, but it's not quite institutional. But a lot of that paper gets sold to Wall Street. I was on a call with my guys at Success Cap today, and they're like, well, why are rates going up, 0.5% or 1% on this program or whatever? And I said, well, it's pretty simple. You got companies that raise their own capital, and then you got Wall Street that buys it all, right? Fix and flip money, it's my money. I can go in and loan it at 7%, 8% or whatever, which we've just done some hard money loans at 7%. And then it's my money, I'm going to get it back. Now, you start talking about short-term Airbnb loans, long-term rental loans, all that gets traded to Wall Street. So when Wall Street moves, you'll see every lender across the board, thousands of them, all move together. And usually you'll see the private guys go with the market, right? They can stay down a little bit to try to beat some people. But just so you guys know, private lenders, in my mind, because I'm the old guy, was the local dentist that you knew from the RIA that had about $1 million. And he said, I like Kevin, I'll loan him one. You know, he only had $1 million, so he wasn't going to be able to scale your business with you, but he didn't pull your credit usually. He went and looked at the house. He knew what neighborhood you were buying in. That's the old true private money. And before that, the hard money guys were the guys that didn't even care who you were. They wanted the property. They'd only loan you 50 cents on the dollar because they didn't care if you paid. They were loaning to owning. So this space went from hard money to really institutional money. Like, we're doing loans at 3 and 4% for hard money, non-income verification. Think about that. Who wants to only get 3 or 4% on their money? The big insurance companies and the bond funds and stuff, right? So they're willing to loan us money and get it out there at 3.5%, 4.5%, because otherwise they're going to loan it to the homeowner at, you know, a little bit less than that. So they're all seeking yield. So just think of money as Wall Street kind of is the guide. Private money will kind of follow with that. But when rates change like they are right now, you see the conventional rates move. All the hard money, especially short-term, long-term rental money, that changes too. Fix and flip and private money is where there's a little more freedom. But let's face it, the guy's going to want to get as much money as he can. So right now rates have been driven down to 7 as a base rate. We're being told basically all of our funds now are at an 8 base rate. So if you're squeaky clean with lots of experience, you're going to get about an 8% rate. A month ago, you probably get a 7.5. A month before that, you get a 7% base rate. So
yeah, and you know, in our model, what we teach is that the rate, since there's obviously short-term debt that you borrow and long-term. Well, in short-term, our short-term is really, really, really short-term. Like if they're doing the strategy and model that we tell them to do, they're in and out of the hard money and call it 60 days, right?
Yeah.
So if you're in and out in 60 days, the points is obviously important on the front side, but you could charge me 20% if I'm only going to be in it for 60 days. Doesn't change anything, right?
We get some people that say, I'm not paying points, or other guys will say, I want this rate to be a certain rate. And I always laugh because you should not pay any points at all. Who cares what the rate is if you're going to get in and out of it? A lot of people think they're going to get in and out, right? And then they get stuck. And now they're a year and they want to do an extension. And
not
at that point, I'm like, you should have, at that point, they should have paid a point or two to get their rate down, because then now they're 18 months on this project or whatever. So it's really knowing your
fortunately our people, our team and what we're doing, we don't do any rehabs. We're in and out.
Nice. Yeah. Rehabs are where you get caught, man. I'll tell you, the contractor leaves with the money. The contractor takes too long. My partner was going to be the contractor, and he has a cocaine habit now. I mean, I've heard all of it. And he's
got a sheetrock problem also. You buy 60 sheets of sheetrock, and you only end up with 32 in the house.
Yeah. Well, I can tell you a million nightmare stories.
That's what we teach. We let the buyer that we sell to be the rehabber. And then we don't have to deal with any of that. And then we can do 50 more projects by the time one rehab is done.
Yeah. A lot of people are those brick and mortar people. They want to touch it and fix it up. They watch HGTV a little too long. You want to make money, you get in and get out, and you trade as much paper as you can.
Yes.
And if you do close on it and turn it, then turn and burn.
Let's talk about on the AB. We call it AB on the buy side and BC on the sell. I don't know if people understand those terms, but AB just means that's what we're going to buy it and be the buyer on one side of the transaction. Then we're going to be the seller to another buyer on the back end. So on the front side of the transaction right here, when we're going to be the buyer, we're going to be filling out the application, sending it in, submitting to get the deal funded. We talked about the rate and the term and stuff, and that's all a function of the borrower, the asset, a lot of things that go into making that ultimate decision. But in a high level, Kevin, what you have a tremendous amount of lenders and programs, right? So, and I know that comes and goes, but give me a ballpark, because like when I go to, I used to do a lot of hard money deals in Dallas. Well, Dallas may have, I don't know, you have a handful of lenders that have cheap capital, but they run out of money, right? That was my biggest problem in borrowing with local lenders that they're, and only having a handful of them, was that they may not have the money available at the time that
even
you
the
need
big guys will cap. Yeah, even the big guys will
cap it out.
Cap an investor.
We're going to run in that problem. We're going to run in that problem with you guys.
No, because we'll just place the money with a different fund, different hedge fund. So if we bring it to one fund and they're like, well, this experience they only have one deal under their belt. We're only going to do $500,000 for them or whatever. We kind of aggregate it all and give you like a line of credit with us. So we know what our line of exposure can be with you. And you got to understand, what I tell everybody is I'm a flipper. I can take you to a house in Orlando. I can take you to another one in Sanford I'm flipping. I go up to Knoxville. I mean, I know what it takes. This isn't, and we're very transparent, by the way. Dave will tell you, like, I flat out tell people, you want us to make money in the front? You want the fund to pay us on the back, or both? Or how do you want to get, we're going to get paid, or we're not doing the loan. I mean,
right.
That's what
everybody's got to get paid, right? Everybody's got to get a little money.
We're humble about it. We're transparent about it, which is
what I like about what you guys do, because you have a lot of, there's a lot of Wall Street money that backs a lot of these programs up. But if you're doing a deal in Orlando, Florida, or Houston, Texas, or Phoenix, Arizona, or wherever it is, most people think they got to find a lender local that's physically local to their market.
No,
and that's where
most of them loan everywhere.
We don't have to worry about that. That's what I love about using a fintech lender to do all this. You submit it one time, and then it's on your side of on your side of the business to figure out which lender and which program is the best match for that particular deal. Right? Am I correct on that?
Yeah, I would call us. People say, "Are you a broker?" I'm like, "I'm a broker when it makes the most sense for you." We're also we're a correspondent lender where we actually put some of the money in sometimes.
Nice.
I have. By the way, I've done lots of wraps myself where I was wrapped, and I also wrapped other things for people. So not to your level, but I've done 10 or 20. So I get it.
You understand that. You understand that concept, right? And I mean, I'm telling you right now, a lot of people do not understand the concept of what we're talking about. And what we can ill afford to have, my opinion, is I can't go out and teach and show and tell financial institutions what we do and why we do it. It just is an efficient use of the time. So as we have right now, we have a really finite amount of time, in my opinion, to really make hay right here. Right. And we just got to get in, get out, do it again, get in, get out, do it again. It's all about velocity and getting in and getting out. And by minimizing that time it takes to underwrite the deal, that takes time, right? If we can take the underwriting process from 14 days down to 5 days, and we were able to do this, and you look at it over the time over the course of a year, we might be able to squeeze an extra 5 or 6 deals a year through the pipeline without ever impacting the capital stack or what we do. That's where we make the money on these deals. So
we want everybody to get pre-approved. Yeah, I see someone saying, should we get pre-approved? That's absolutely the best way to go. So you're ready to go. We just got to get the deal underwritten. So
you can pre-approve a buyer almost on, I don't want to call it a line of credit unless that's what you guys call it, but you're almost saying, like, based on what I'm seeing here, we think that if all these, like, build this avatar out and says, hey, if you fit inside this box, there's a high degree of certainty that we're going to approve you on the deal, and it will take X amount of time to do so.
What's the avatar look like, just on a high level? And then what type of credit? How about how much liquidity? Because what I do is when I was starting out, that's not true. I actually did have some money because I started out later in life. But my point is if you don't fit into that avatar, then you go find the avatar that does. And then that's where your angel process looks. That's where, because if they bring a deal to the table, you guys will figure it out how to make money, because that's what you do. There's so much. If there's a deal, I come to you and I'm like, hey, I've got a package of 51 loans. In Corpus Christi, for example, it was just sent to me yesterday, or deals. And then we go and figure out how we can exit out of these, because we want to exit out in loans, right? We don't want to be landlords. That's it. We don't.
Right. So. No, we don't either. I love all the notes I own right now. So here's what you got to think of. Wall Street builds the boxes, and they're almost all the same boxes, with maybe one box goes a little bit over here, one box a little here. So that's where you start. That's like the easiest. And think of their buy box for us is like your buy box as an investor. They have their buy box on what paper they want to own and package up and sell off as a bond. Okay. So if it fits their box, no questions asked. we happen to be the one private hard money lender that has a bigger box, number one. But number two, we'll say, wait a minute, there's something here. We have a meeting every week just for my loan officers to present me angel deals. Just say, hey, this is a great deal. So if you think about the barstool analogy, he doesn't have enough for my fat butt to sit on unless I get involved, right? So now I'll say, all right, let me go and throw some cash into this. Let me go ahead and use my credibility a little bit, use my lines of credit that I have. And now this guy, honestly, we're looking for success cases from these folks. It's in and out. It's 12 months or less. We don't do any long-term angel stuff. This is us just trying to help someone get their bar stool fixed. You know, we want them to be able to stand on their own. We just hope that they're loyal to us and get their capital from us going forward. So, but think about the buy box and the bar stool analogy. There's a box that fits no problem. And by the way, that box has gotten huge in the last couple of years with, you know, as long as you have 20% to put down and a good credit score, they don't care if you're like a nurse. They don't care if you actually have any experience whatsoever. So there's money for those folks. And then there's a guy that he's a contractor. He doesn't pay his bills very good because he's out on the field working. Yeah. But he's done 400 flips, but he's still got like a 580 credit score. Those you got to dig in, and it's a manual underwriting process. He doesn't fit the box because that barstool leg broke because he's at a 580. Here's another thing you guys should have your listeners look into, which is kind of new to me when I joined Connected. This business credit stuff, which I know there's a lot of kind of wild west out there doing it. You got to be careful. There's groups that you join and you pay like, if you do the math, you're paying like 9 points for that money. So I would be careful how you do it. I know Connected's connected with a bunch of different people, but I noticed the average money is $50,000 that they're getting. Yep. And here's the thing about it. It used to be they sourced it all, right? They always looked at 2 bank statements. We have a fund that doesn't care as long as you show the money the day before closing. Yeah. That's where it comes from. And then with our model, we were at a meeting the other day and they're like, okay, it's up to 250,000 non-recourse due in 12 months. Yeah. And I went, crazy money. Well, what happens in 12 months if it's non-recourse? I don't understand. Yeah. Yeah. I didn't want to give anyone some bad ideas, but I was like, no, but they have to come after you. Doesn't line up. Yeah, they have to get a deficiency judgment against you and all that. But with real estate, the stuff that we do, there's a personal guarantee, so it's recourse. Yep. But it's short term, you're in and out. And you know, if you have your strategy in place, like you guys have a well ironed out strategy, the risk is mitigated quite a bit. And like Nick said, if the deal makes sense, don't worry about it. We have literally approved a couple $2 billion worth of buyers in our group now. Here's another bonus for you guys. And I don't want to sound like I'm selling anything, but when you get pre-approved through this program, you guys are going to get access to our portal, our exchange, the Connected Investors Exchange. We normally charge $400 to get someone approved for that, but we're going to set up a portal for you guys to where you can go in and see all the inventory. But right now it's like 60, 70 properties a week. But I got all of Zillow's properties a couple of weeks ago. We put 1,100 properties on there and you bought them off market. 1,100 Zillow properties through my program, through the NCST, through our nonprofit. We were able to bid on those. We only won 4, but you know how they overpaid for those houses. So for me we bid 200.
Just wait another 2 years and they'll look like geniuses. That's the way I look at it. Jesus Christ.
Yeah. Well, so the thing about we get 100, I'll get like 50 properties in Atlanta off market. I'll put them out there, and I'm always kind of disappointed with our we call them CI buyers. I'm expecting to be flooded. I'm expecting Daniel and Cameron to be so busy presenting offers back and forth that, you know, 50 houses times we have what do we have? 2,300 certified buyers now. In Atlanta, we might have 200 or 300.
What portal do they go through? The successcap/creativedealmaker.com to get access to that portal?
When you guys get pre-approved through SuccessCap, we're going to give you access.
Oh, okay.
So you'll become a qualified buyer.
Yeah. That's what I was calling. That's what I was saying. It's like a bonus thing because if you go to Connected and you go out to any other lenders out there,
Yeah.
It's great. I mean, that's what I'm in charge of. I sell these leads out there. But then you have to go apply to be a CI buyer if you want access to the off-market property. So it's something Ross asked me to build 2 years ago. I came on, I started building it. I've been building it for 5-6 years now, all part of the originally.
So through the link that we have, right? So it's almost like a back door in a way, right? To get into can they, can they go ahead and go and put in a, even if they don't have a deal yet, go ahead and start filling out and becoming a registered user
certified
on the
buyer,
platform?
certified.
Once we approve them, so basically when they apply at Success Cap, they're also applying. It's all on our same back end. They're applying for CI buyer. We call it the exchange. They're getting access to the exchange.
So what that says, and I'm going to say it and how I hear it, and correct me if I'm wrong. So being a CI buyer means like I've already been pre-vetted as a qualified buyer. Okay. Yeah. That means that if I see a property that's in the network and I raise my hand and say, I'm interested, the seller already knows that I've been pre-vetted to a certain extent.
Right. Yeah.
And I'm not some guy who can't go down and get the funding. That's what
right.
we're saying, right?
Because, and we vetted the property to make sure the person, if it's a wholesaler, we allow one layer of wholesaling. We don't allow wholesale to wholesale.
No daisy chains. Okay.
Yeah, no daisy chains. We actually go and visit.
Eric, can you check that link you're putting in there? Because people are saying it's not working. Make sure you have the right one. It's on the Facebook. It's in the Facebook group.
Creative Deal Maker. Yeah.
Pretty sure that's it. Whatever's in the Facebook group is correct.
successcap.com/creative deal maker. Right.
Is that it? Okay. We'll try it again, Gene. Sorry about that.
And I can fire something over quick to DT if we need to get it tested. But we tested it last week.
It early. It was working.
It works.
So I think this is important because, guys, what Kevin is saying here is that this is another potential source of deal for you guys, right? You're eliminating a layer potentially with the seller, because the seller can only sell that property to one person, right? If I want to buy it, Kevin wants to buy it, Dave wants to buy it, right? You can.
I'm having problems with that link too, guys. I'll get with Daniel, find out.
All right. Yeah. Okay. So, Jeremiah says I'm able to log in. Cool. So this is really important, and because this is not really necessarily dealing with the lending side of it, but as a byproduct or a collateral benefit is you guys get to be pre-vetted buyers in a system. So when properties become available through the interchange, think of it like eBay, right? I mean, it's a marketplace, right? People can post the properties, but if you're going to sell a property or be a buyer, it's always best to have something, just like when sellers go, well, show me your proof of funds. Well, if you don't have a proof of funds, you're probably not going to be the winning buyer, whether you're offering more money or not. This is not about how much money that you're going to pay. It's about velocity. I've said it 1,000 times. People do not want to screw around in this market right now with people that can't perform. What Kevin is saying is by being a pre-qualified buyer, you're vetted. They know by definition that you're going to be pre-qualified and you will be able to perform. It's up to you to do so. So
I think Nick, where that spins into is there's 3,300 counties in the United States, Kevin, and we'll get inventory opportunities that we've vetted, and we are looking for bodies in those 3,300 counties. So if you become vetted and you become consistent and we know who you are, the process becomes easier. Now it's me, and this is where the white glove comes in, is I'm going to talk to you, check up in on you and saying, how are the deals? I'm not going to talk about the lending. I'm going to say, how are your deals? Where are you finding them? What are you looking for? Oh, by the way,
the deals. There's plenty of money.
This is what we tell everybody. If you go if you just focus on the deals, the other side of it,
money will come.
Yeah.
But now, and then you guys are giving the deals too. So now,
right.
Yeah.
You're giving the deals to fund. Basically,
I think we're the only lender. Well, I do that out of greed a little bit, to be honest with you, because I would do a $10 million line of credit with a guy in Jersey, and then he'd borrow $1 million from me that year. It was a lot of work to do $1 million for the loans. So I started saying, hey, could you handle this? Can you handle that? So I started calling my sources and I started feeding these guys. I got a lot of clients that
Kevin, you can't. I say this to the group all the time, and this is really important. If you guys are going to listen to anything, this is why we have these people and groups on like Kevin and Dave, because guess what, and how it impacts us. We're note buyers at the end of the day. Guess what we want? We want it to start at the beginning correctly. We want the right assets. We want the right lenders. We want the right paperwork. We want the right deal flow. So when it gets to us and we're going to help them exit out on the BC side of the transaction and we become the note buyer, we want that paper to be written as correctly as possible to give it the most value so we can buy it. They can exit out quickly and they can go do the damn thing over again. Done. It's rinse and repeat. So all of this stuff, guys, all this adds to the cycle time it takes to get from point A, the beginning, to point B, the end, or A to Z, however you want to look at it. And if we can cut that time from acquisition to disposition down, think about it. If you can go from 4 weeks to 3 weeks, okay, I'm just using round math. 4 goes into 52 weeks, about, what is that? 13 times, right? If it takes you 3 weeks instead of 4 weeks, that's 17 times. So that means you can do an extra 4 deals a year without changing anything from a financial side of it, except doing 4 more deals. If your average deal is $20 grand a deal or whatever it is, that's an extra $80,000 because you're more efficient in the process that you implement. And it all starts at the lender level, because you guys only have a certain amount of capital stack to work with. So let's say you got $50,000, and that $50,000 got to cover your down payment in the deal, right? How many $50,000 can you do at one time? Let's just say it's 1. Well, if you're able to get in out faster, you're going to be able to use that same $50,000 over and over and over again.
In our business model, it the way we have it structured is that you're turning it so fast. I have a couple. I got a couple questions for you guys. So one of the things that we get asked all the time is for our nationwide group is, okay, you guys want to buy the note from us. What do you need? One of the biggest challenges for us is, because we want to be able to get in and out as well as quick as possible, is title companies. So we have in Texas, we're good. We got the right title company. We tell them exactly what we're looking for, so we can go in and out of the title company. But if we're using a title company on the A to B and a title company on the B to C, it's time, because we got to figure out who's doing what in order to make sure that when we buy that note that we're protected, right? And so what do you guys recommend on that on a nationwide level? Because you guys are nationwide on title.
Yeah. Well, my answer before was Blueprint Title. That's who I partnered with.
Okay.
Transactly for all transaction coordination. Because remember, every transaction we do, we actually run it through a legal brokerage system. I'm a broker. I'm our national broker. All I am is a Florida broker that has a deal worked out with all 50 states with a different broker in all 50 states. All these guys, I want most of the commission, so they're not going to do any work. So I partner with Transactly.com. So they have the person for $200 or $300 that will sit and do everything for the realtor. And then I partner with Blueprint Title because they're in most states and they cater to investors, right? Then First American bought us, so I can't mention Blueprint Title anymore. So anyway, First American is
you can't
big,
say
yeah. Look. So let me ask a hypothetical question, Kevin.
Yeah.
From your side of it on Success Cap, okay? Is it more beneficial to deal with a title company that's more at the local level for the area, or in a national setting, that because of the fact that they're just not 10,000 pound elephant? What from a lender, not from a from a lender's perspective, and the ease of working with them and getting, and it all boils down to the escrow officers. I get that, but just conceptually, does it matter one way or the other?
So all the local guys are tied to a national guy. So for your listeners, there's a First American or the person that sells the title insurance is actually a national company anyway. I would ask about reissue credits. So if you're getting in and getting out, you don't want to pay that owner's policy, lender's policy twice. So reissue credit saves a lot of money when you're doing a quick transaction. And then the other thing is just look at their fees. I use a local person here, but she'll only do Florida for me. So if I'm in Tennessee, I use a different person. If I'm in Jersey or Chicago, I use a different person. And then in some states, of course, you have an attorney. And I learned in New Jersey, if you don't have your attorney, you ain't closing. So you got a buyer, you got a realtor, everyone's all agreeing. You say, no, we're going to waive our attorney right. Yeah. You just held up your closing for 4 or 5 months.
Yeah.
Because if you don't get Bill or John in this Ocean County area, you ain't closing your deal. So local is real key, especially in these different townships and things like that. But they're all tied to even the attorneys are tied to attorney's title insurance. And then everybody else is either with, who's the one who just bought PropStream?
Not Chicago. It was,
the other one, not First American, but
I've contracted for them. It's on the tip of my tongue.
I can't.
They're huge.
We'll get that. Hey, while we're talking about this, we had a great question coming from Derek, and they're non-U.S. citizen, non-residents.
Yeah.
They're flipping sub 2 in the U.S. They're completely remote. They have a U.S. LLC. Kevin, I'm pretty sure we did Canada. Was that us?
Someone said Stewart Title. Yeah, that's who it was.
Stewart.
Yeah, it was Stewart.
I don't use that.
I used to be a Stewart Title company, so shame on me for not remembering that.
Stewart, the only Stewart I know is a mouse that rides around in the red car.
All right, so here's the thing. So no money can be lent outside the United States. So as long as it's US-based real estate, we have done some Canadian deals. What they really want to see typically, like I'm not going to loan my own money, or I probably won't even cooperate and do what we do sometimes is called a cooperation. It's kind of like if you see a building downtown and it's a $10 million building, but so-and-so local bank will only do 5 million, they'll call the other community bank and they'll go together and they cooperate. That's what we do on a lot of our loans is I come in, let's say the borrower puts 10%, I'll usually put another 10% or 20%, and I buy the rate down for myself. So I get that yield, I get that spread. We get a 24 to 35% rate of return on our capital by doing that, by taking on that risk. So when I do that, it's Florida, Georgia, Pennsylvania, New Jersey, Chicago. It's areas that I know really well. But that's how that part works. So when I'm not going to do that, where we're just going to sell the paper, you want to make sure they have an I-10 number. That's basically, it's like your social security number as a guest in the United States. So take the time to go get that, because most of the funds will treat you, especially Canada, let's face it, that's the 51st state. Hopefully don't piss off any Canadians on the call, but other than the latest thing that's happening up there, they seem to be part of America. So the Canadian loans seem to be easier to do. Of course, I'm down here in Florida, so you got a ton of Central South Americans coming up. Those loans are getting done too. Sometimes you're going to be 20, 25% down, but it all depends on the person. Like I talked about that bar stool. If you got some real strong legs, they might let one of the legs be a little weaker, Well,
guys, and here's the other thing. You're in this community right here, right? If you have a good deal and you can vet it and you can prove it, post it and have somebody that has the financial capacity to be a partner in the deal.
Me and Nick are financial friends, put it that way. We'll be your financial friend. But to answer the question, the way they have it structured, they're a U.S. company, but their members are out of the country. So would that not work unless they had I-10 numbers?
Derek, does that cover what you're asking, Derek? I didn't want that to go wayside. We're going to do our best to get to the questions, but where are you, Derek?
So I'm in Costa Rica and my partner is in South Africa.
Whereabouts?
In Costa Rica, in Tamarindo.
Yeah. Okay. I did time in Nosaro and Guanacaste, so we'll talk offline about that.
Like 5 to 10 time, Dave, or what? Like 5 to 10, or what kind of time?
I was in Costa Rica for 2.5 years. So I was doing luxury real estate. So
luxury real estate, not prison time. Okay.
Yeah, that was Bermuda.
I'm just getting clarified.
He speaks perfect Spanish after.
He does now.
We'll get together, but Derek, I wanted to address that for you because I know that's kind of important, and we don't want to, negate anybody on this call. So run, my friend.
Yeah, so we're South African citizens, but we have a U.S. partner who's a minority partner, minor partner, really just so that he can do all the notarization, etc. Because that just turned out to be a nightmare with all the embassies closing all over the world with COVID. So he's helping us out there, and he doesn't want to get involved in our business from a financial perspective. But I take on board the I-10 comments. So we still have to complete that. So we'll do that.
Let me add one more thing though. One thing to keep in mind, anybody that's on your entity has to do a personal guarantee. So if he doesn't want to get involved financially, it won't fly as far as him. The funds want to see everybody who's on the LLC. That's why we provide the documents and the operating agreement and everything, because they want to see who's on this thing. And I'll tell you, I can tell you nightmares why they do that. And that's why I support them doing that. Yeah. Where one partner borrows, the other partners don't know about it and all that kind of stuff. Hard money used to be super ugly. Like there was constantly partners messing each other over. So just remember, a partner that's going to be on the LLC, I don't care if he's 0.5%, they're going to ask for a personal guarantee. I've gotten that waived very, very seldom. Everybody's just trying to compete on these rates. And, you know, when you think about interest, your rate of return is risk adjusted. So the more you can lower your risk, the lower you're willing to take as far as your return on investment, because it's risk adjusted. So that's all they're trying to do. They're trying to mitigate every type of loss mitigation they could have. So when you tell them, hey, I can't give you that assurance, understand that could kill a deal, or it could make your LTV change or your rate change or something like that. So
do you guys do deals where there isn't personal guarantees?
Yeah. At what point does it become a true asset-based loan?
It's very hardly anybody does it now, to be honest with you.
So you're saying if I have a $200,000 house and I can buy it for $40,000 and it's moving ready, you guys won't loan on it?
Nobody will want to loan $40,000. First of all, everyone's like $100,000 minimum.
Okay, add a zero.
Yeah,
I can buy a $400,000 house for $150,000.
That's where you want to be in the private money space.
Okay.
Yeah, private money guys.
You can get non-PG money out. You can get non-PG money but right now, I mean, for us, I mean, I'm on what we teach is there's a gap of time when you're fix and flipping this house, meaning buying it on the A to B, selling it to a non-bankable borrower, and then sell the first, keep the second free and clear. So we don't worry about that. And as the seasons change, right, in regards to PGs and all this other stuff, Nick and I's personal opinion, I mean, God forbid, like just in this group alone, if you just show up on a weekly basis, there's enough deal flow for the rest of your life nationwide, just in this group alone. And there's 62 people on the call right now, not including our replays, but the opportunity is there. And so using your funds to acquire, I have one more question for you as the professional.
Yeah, we got about 5 minutes left, so let's make sure we get the last couple.
I will, and we'll get the replay out, but we'll also redo this call because we have a lot of great questions here. Because we do have
and we're not strangers, guys. We're not strangers. We'll give you our contact information. We're here to help you guys. We are here to help accelerate and.
Yeah, my question is, so we have the due on sale clause. We have Wall Street money. The Wall Street money. We just bought a house. I'm just saying for $150,000, we put 20% down. Let's say the value's 200 plus after repair. And we buy that, we're getting 4% money. We have a PG, the whole deal. And it goes to Wall Street now. What's the potential? This is my personal question. I don't know about the group. What's the potential of that being called due, and how in the world would they actually figure it out?
It drops the further it goes. The chances. The only way you're going to get on the radar, guys, is if you don't pay 3 payments.
Boom.
It's in customer service for 90 days. You call.
You know how many times I've ever had to make 3 payments, Kevin?
No, they
1,200 deals.
I've never had a due on sale clause or an acceleration clause kick in on anything I've done. And I've done some crazy crap for the last 20 years. I can tell you, the further it gets down the road and gets sold to an insurance company or a bond, it's a pain in their butt. In fact, that's why they put the prepaid penalties in there, guys.
Yep.
It's because it's going to screw them all up to have to go pull that one loan out. If you're paying, it's like this. Hear no evil, see no evil.
It's like our loans. When we sell our loans and we're the borrower or we're the lender, if someone went and sold that property and did whatever, but I keep getting paid, I wouldn't even know it. I wouldn't know it. Just as long as insurance and taxes are paid, I wouldn't know.
You're never going to get notified unless 1, the payment gets 90 days behind. 2, you didn't pay your insurance or your taxes or your HOA.
They won't, there's no department. It's kind of like an FHA loan getting called due that you take over sub two. They don't even know they wouldn't even know where to start.
It's not even important enough on their radar yet. That's why it has to go to loss mitigation after 90 to 120 days.
Just as long as it's getting paid.
Yeah.
So I won't hold you to this. And Nick and I don't teach this whatsoever, but when you have 4% debt right now, 30-year fixed, and you can arbitrage the crap out of it at what we do, and we provide home ownership for people, do what you want.
I basically did this, and I wrote a PPM. I filed it with the SEC, and it's basically for all the strategic defaulters, I finance them between 10 and 12, 13% interest with 10 or 20% down. And I do them subject to my note sometimes. I even wrap, just so you guys know, I wrap hard money loans.
Yeah.
So I charge 2 and 12 for some guy I know he has a good deal, but I may go get 1 and 8 myself. So we wrap hard money a lot too.
You know how many strategic defaulters there are in the state of Texas?
There's
not very many.
Not much now.
Not much.
Now when they're owner occupants and they have nowhere to go to get another loan.
Hey, when they say don't mess with Texas, I think they meant don't mess with Texas banks because they do not.
Well, they have that.
They don't side on the side of the
state.
buyer or the tenant. All right, hey guys, we're at the top. We're wrapping this up. Guys, thanks so much. If you guys have any specific questions that we didn't get answered, go ahead and post them in the Facebook group and we'll get them so everybody can benefit from the questions and answers. And then we'll probably have either Dave and or Kevin on again at some other point.
For sure.
Go onto the link, get pre-registered if you guys think you're going to need money, because at minimum that'll at least get you access to the certified buyers access, which is, I think, I didn't even know that was going to be available. I'm actually a member of it already, but I have no idea that was going to be an indirect value in this. And that's awesome because that'll just look, even if it only produces an extra 1 or 2 deals a year for you guys, that's 1 or 2 more deals that you didn't have before. I mean,
when the market changes and 5% and what is it? When you have a supply and demand issue, meaning you're selling homes on terms and no one else in the market is, it's literally game over. Like, so that's why it's like getting these relationships, building these relationships. 20 years from now, there'll still be a supply and demand issue for seller financing terms. It'll never, it's just never going to change, especially as people start becoming more self-employed. You know, no one wants to work anymore. Somehow they're working and making money. I have no idea. That's a whole nother discussion.
Not me. I can tell you that it's not, I'm working more than I ever have. And it's all because it's just a big land grab.
Yeah.
Hey, all right, Kevin, Dave, thanks so much for doing this. We appreciate it.
I wanted to say one more thing real quick.
I saw there was a question about a collaboration. Just get with Nick and then Nick will get with me on that. And if there's
I think that was Armin.
Everything we do is with Nick. So if there's a third party, everything's with Nick.
Yeah, so, Armin, if that was you, go ahead and reach. You know, you got my contact information. Just give me a buzz and we'll get you guys hooked up.
That was me.
We're not doing a call next week. Eric and I are both traveling, so it'll be the following Tuesday. So just so you know, we won't have it. And then I'm not sure what the topic will be, but we'll let you guys know in the Facebook group and through email. All right, guys. Thanks, Kevin, Dave. You guys all have a good week.
And guys, thank you.
Take care. All right, bye-bye.
Take care.
Thanks, everyone.